Analysts expect market correction to set in the second half of this year, driving a likely pullback after the peak performance recorded in the first quarter of this year. Muktar Mohammed, analyst at Assar Investments, joins me now for more market updates and movements we've seen so far. Muktar, thanks a lot for joining us on the show today. Let's start off with this foreseeable market correction and how this would drive the pullback the equities market is likely going to face later this year. Your take on that?
Yeah, thank you, David. I think that might happen. We've seen that trying to happen towards the end of the second quarter, but one of the reasons attributed to some of this pullback that you are going to see is because of the recent recapitalization of the banks. And good enough, the banks are beginning to tell us how much most of their share will be selling during this recapitalization. And the good news is that with the kind of noise we are seeing also in the space, mostly from renowned industrialists, manufacturing sector, and businesses in Nigeria, including the state governors, we might not see that hike in rate that we thought would get the interest rate to about 30%. So we might just see a slowing down in the hike of rate, just maintaining the rate at what it is. That also could be a positive for the market. But I think slowdown, yes, it could be slowdown like normally, but I don't think that slowdown might be as much as we anticipated it to be, knowing that we see the half-year results from some of these banks that are coming to recapitalize the market, that could tilt the market again if those results are very impressive, and we expect those results to be impressive. And not to forget that some of these companies will be paying interim dividends. That's also what ticks the market when there's a downtime. But again, a slowdown in the market will give investors good entry point, and I expect that to happen. We might see investors begin to move towards the equity market from the fixed income space, especially if rates are not high, and which we expect it not to be because of the effect that it has had in the businesses in Nigeria.
Yes, and the expectations around the later MPC meeting, which will be holding later this month as well. Now, so many analysts are predicting about a 150 basis points rate hike. And talking about the impact here, what's your take there?
I, for one, I don't think the CBN should do that. Over the weekend, we've seen the establishment of the economic recovery team, led by also, not really led by the finance minister. You have people like Aliko Dangote, you have people like Tony Elumelu. These are people that have come, especially Aliko Dangote, have been critical of the CBN policy on hike on rates. And again, I think with that, I don't think it will be suicidal if all these complaints have gone on and the CBN still goes ahead, because the basic challenges of Nigeria is not just in the hike of rate. That will not solve the inflation and pressure we are going through. We all know why we are going through those inflation pressure, because of 90% of what we consume, we virtually import them. Even when we don't import them, we are not able to meet demands. Demand and supply is still there. It's still a challenge. Distortion in terms of food price, food security, especially from the movement from the north due to insecurity. These are things that need to be fixed, rather than you saying, oh, you hike the rate. By hiking rate, you are definitely killing more businesses. I hope this message has been passed across to them. So I don't expect those rate hike in whatever form, whether by 50 basis points or by 100 basis points. I don't expect that. And I think if that doesn't happen, which I expect it not to happen, the equity market will be the one to gain from that.
Well, we'll see how things will pan out there. But now let's talk about some of the top gainers we also saw in the first half of this year. Geregu, Dangote Cement, Boa Foods, these are some of the tickers that gained quite well in the first half of this year. What's your prediction as we go forward? The stocks on your radar, we all know that everyone is looking at that dividend yield so far and also opportunities to maximize profit. For you, what will be the stocks investors should be looking towards?
I think in the second quarter, investors should not take their eyes off the banking stock, like I always say, the tier 1 bank. And also, you look at the tier 2 bank, don't take your eyes off Fidelity, what they are doing. But again, if you look at, don't take your eyes off Nigerian Brewery. Well, they might come for the right issue. Don't take your eyes off Guinness, especially with their acquisition, and we've seen that price movement. Also, don't take your eyes off NASCOM or Dangote Sugar, if that merger will come to their fruition before the end of this half of this year. So that's also a very, very good stocks to look at. Boa Cement, I think you when you look at the cement sector, I think one cement company that I expect to gain so much in the second half of the year will be Lafarge Waco. I think because if you look at the price commensurate to what you are seeing in with Dangote Cement and other investors may be looking at that for capital appreciation also. And don't take your eyes up Owando if at the end of the day they are not pulling out of the market, especially with their acquisition of assets from Agit Oil. So I think investors should be optimistic going into the half of the year. Like I've said, in this particular stock, I'm bullish about these stocks that I've just mentioned.
Well, Axis Holdings today is also opening up its rights issues for offer today, and that commences today. We had earlier heard of the plan as well, and it's open to investors today. But moving forward now, when we're looking at some of the dynamics which were the downward drivers of the equities market, take, for example, the impact of the volatility we saw in the FX market space. That was also one big blow. So many individuals and businesses across the different sub-index had to face. Now, if the worst of the Naira volatility isn't over, as the central bank governor is optimistic, and then we have any surprise tilts, twists and turns, how do you think the fate of the equities market will pan out? A different case scenario from what you've earlier painted as towards some optimism and a reduced market correction.
Yes, if that plans out, you and I, David, knows that the gainers will be the financial stock, like what we've seen already. And if it goes the other way around than what the CBN is saying, what the CBN governor is saying, those that will suffer will be the consumer goods sector. That is some of the companies that I have mentioned, like Nigerian Brewery, Guinness, MTN. They are trying to recover from the volatility that we saw in the exchange rate. But for the financial sector, when there's an upturn in this exchange rate because of their financial instruments that are and mostly in FX, they seem to be the ones to gain from it. So if such a thing happens, definitely is the financial sector that will benefit from it. But again, the consumer goods sector, the conglomerate, will be the one to suffer, like we've seen we've seen in MTN, we've even seen in Dangote Cement, we've seen in Boa Cement, we've seen in Guinness Nigeria, we've seen that also in a stock like Nigerian Brewery also. And also we saw that happening in Unilever, where shareholders' funds are be completely wiped out. And so if that happens, then I think it will be bad news for those that are looking into the consumer goods sector or the manufacturing sector, the conglomerate, especially those that do business with that's tied to FX. But if you are an investor in the banking space, that could be a game changer for wealth creation for you, because we might see these banks begin to sell at an all-time high. Based on the experience that we had previously, when we saw this exchange rate going the way it was, you saw that the banks were mostly the ones that have gained from it, even from their results. So if it goes that way, the financial sector seems to tick. If it goes the other way, the conglomerate will have to suffer. But again, what you look at it, whichever way it goes, I think the financial sector seems to be the one that will profit more. That's why you see most of us analysts always stick towards the banking stocks.
Yes, with stocks with very strong fundamentals. We'll leave the conversation here for now, Muktar. Thanks a lot for your time at the show today. That was Muktar Mohammed, analyst at Assar Investments.